All right, break-even point. Okay, or break-even analysis. Okay, again, this is Bob, the Mortgage Coach Mitchell, and we're working on glossary terms, and we're in the B's. We're talking about the break-even point or the break-even analysis. Basically, what that means is if you're looking at buying your interest rate down, let's say that right now with 0 points, you could get 7% interest rate on a 30-year fixed rate of the particular program that you're applying for. All right. If you wanted to, you can buy that mortgage rate down by paying a discount point, up an upfront fee in order to get a lower interest rate. All right, so let's say that instead of 7%, you could get 6.75, but it was going to cost you 1.1% of the amount borrowed. So you were borrowing $100,000 to use a nice even number. So that would be $1,000 would be the cost of buying that rate down. Now you're going to save about 0.25% in interest, which is going to make your principal and interest payment go down. So whatever that savings is on a monthly basis, you would divide that into the cost of obtaining that savings, and you would come up with a number of months that it takes to break even. That is the point where it starts to make sense for you to have bought the rate down. Generally speaking, in my opinion, it usually doesn't behoove you to go too much, to go one way or the other. Now, when you price an individual mortgages, sometimes there are bargains to be had. You might be able to get, well, the other day I got one where I got 0.25% in lower interest rate, 0.25% in the interest rate for paying like 0.25 point. It was like, that's a no-brainer. The break even on that was like 6 months. So now, generally speaking, when you do these, a lot of times they'll come out to be 5 or 6 or 7 years in the break even. In that case, I'd say keep your money in your pocket. But that's beyond the glossary point here. So let's just stick with the break even point. It's basically the point where the amount that you save equals the amount that it costs you to get it.